In this video, we're going to take a look at level two and understanding the importance of using it and also what to look for when you are trading OTCs. At least this is what I've been looking for the last few years. It's been working really, really well, and hopefully you learned something from this lesson. So when it comes to level two, the first thing you need to understand is there is often a lot of manipulation going on. Okay, size can be hidden, entries can be hidden, a lot of anonymous orders can be coming in. So the big thing that needs to happen is level two has to be used in tandem with time and sales tape to actually get a feel for what's going on and what sort of price action is following through. So at a basic level here, when you're looking at this level two, you can see that there is a very thin spread amongst the buyers on the bid side. And when you look at their sizes and compare their sizes even to the sellers, there's a lot more sellers that are trying to unload shares 29, 31, 319, 32375. And there's a lot of, and in tandem, there's not a lot of buyers that are willing to buy up those shares. Like you're not seeing level two stacking, something that I always talk about when trying to get into an OTC play. You normally want to see that when the buyers are hot, they're really just FOMOing, they're stacking up one after another. I want to see that, for example, 275 is being bought up by multiple market makers, and then 276, and then 28, and 282, and 29, and 30. When I see a widespread amongst the buyers, it it's not ideal. You might get some price movements where the stock moves, a little bit, and you might think that might be a good trade. But the reality is, if these buyers start dropping off, you're not really positioning yourself for an easy fill to sell into a panic. And that's one of the issues with OTCs is that if you try to sell into a panic, it's oftentimes very difficult to get filled. And oftentimes you might have to put in a limit order significantly below where these market makers are buying at to just get filled by one. So it's very, very important to keep that in mind. Now I'm looking at this right now as we speak, and we're seeing, for example, 275 by 29, and there's orders going through at 29. And it's important to see that if, let's say, in this case, looks like 103,000 shares went through. If, let's say, another 10,000 shares go through at 29, does this size actually get chipped away at or not? Because if the size doesn't get chipped away at, very well there could be a seller here who's hiding size and just unloading shares at this price point. And regardless if there's buyers, if somebody's hiding shares, you don't know how many shares are sitting there. It could be a million, it could be 10 million. I mean, I'm being exaggerating here, but you get the point. So it's very important to use the price and the size on the time and sales tape to actually look and see if buyers are getting chipped away at or sellers are getting chipped away at, to form an indication to either strike and get in or sit on the sidelines. Like, for example, look right here, like 1 to the power of 6 million shares, I guess I'm gonna call it. I don't know if that's correct terminology, but this is a lot of shares being unloaded at 0.03. And with there not being a lot of buyers loading up here at 0.03, what are the odds this thing's gonna move? So then, why would you want to be buying it when there's these big, big sellers sitting here at different levels? And again, like I said, this can be manipulation. This can also be nothing more than somebody just trying to scare you away from buying so that they can influence the stock in a certain direction. The OTCs are the Wild West. It's very, very important to make a note of that. It's the Wild West, and really a lot of things go. Now, in tandem to watch on level two, let's go look at something, for example, like ATNF, and let's open up this one right here and take a look at a listed play. And you can see here where there's a very sort of wide spread between buyers. What is it, from 12 to 930? So $3 a share and $2 a share. So when I talk about spread on level two, I like to personally see, if I'm long, that there is a wider spread on the sell than on the buy. Like, on the buy, if I got $3 a share on the spread and only $2 a share on the sell side, that means that there's a lot more selling pressure right now because you have a smaller spread. If you have a wider spread on the sell side, then you have a lot less selling pressure, and if the bids start stacking up, it's a lot easier to chip through those sell orders. We're not really in a super hot market right now to be able to show you what level 2 stacking necessarily looks at, but just I want you to, for the sake of imagination, just recognize, like you saw right here, 1250 come up, 1244 comes up. Okay, so when I talk about stacking, I want a lot of market makers stacking up at 1244, and the market makers on the sells backing off and spreading out towards 1350, whatnot. I mean, again, exaggerating, that's not how the market exactly works, but the point is, if you're long, you want stacking on the bid side and thinning out on the ask side. If you're short, you want the stacking on the sell side and thinning out on the buy side. Okay, so just some basics into level 2 and how to essentially support yourself to indicate where price action is going to go. When you see a lot of sort of back and forth between the buys and sells, the buys stack up for a bit and they disappear, then the sells stack up and then they disappear and the buys stack up, that sort of back and forth yo-yoing is what typically leads to your consolidated price action, which is what we're looking at right now, right? Like, we're basically in this consolidated zone from, what is it, 1270 to 1240. Okay, so it makes sense why that's what's going on. And going back to GSPI here, it looks like we're still sitting very, very heavy on the sell side. So you got the CSTI market maker that's just looking to unload shares at 0.03, so that's likely scaring off some buyers, unless there's somebody hiding a buy order that could come out and chip away at that. So that's what you would want to see. The time and sales tape, you want to see that if this thing did get chipped away, that it's actually confirmed by the share size going through, so that if that's taken out, then that's probably a good sign that you might have some upward momentum, because that's a lot of shares getting chipped away by a buyer, right? So when you think about this, it's always in the context of what are the buyers willing to do, what are the sellers willing to do, and then on the flip side, what is actually happening. And if what's happening is chipping away from the sellers, then the price is going to go up. If what's happening is chipping away at the buyers and chipping away their orders, then it's going to be a downtrending price action. And if there's no time and sales tape being chipped away at all, well, then you're going to see a standstill. It's like the real estate market when you have offers, right? You have to sit and decide, and the seller has to decide if they want to buy, the buyer has to decide if they want to up their price, and it's just, there's no trade actually occurring. I notice LHDX is running right now, so we're going to go and take a look at that and see if there's something we can look at on the time and sales tape to help support us in making an educated decision as to where this is going. Okay, so we can see right here that we have from 11, I don't know what, the 9 is a glitch there, I think. So 11 to 12, so better from $1 per share spread on the sells, and almost $3 a share on the buys. So, the way I see this is there's not a lot of buyers stacking up into this, and it makes sense. There's more sellers. The spread is a lot tighter on the sell side, so I wouldn't be surprised if this thing has a pullback here. So 1170s, maybe back to 1150s, 1140s before it runs again, and then you might see stacking again on the 1140s, 1130s, and then so forth it goes. And why do I say 1140s? Actually down to close to the 11s. That's where the Q level would be. I'm just using, in this specific instance, I'm just using some technical analysis to come up with that. Again, technicals are not always. See, now we're pulling back 1150, right? So it's very normal when the bids are not stacking up to get price pullbacks, and you want to use that in tandem of watching the technicals, of also the quantitative analysis and the fundamentals and the key statistics and the short volume and all the other things that we go into in our courses. Okay, so that's very, very important to tap into. And the big thing here too is you don't necessarily need a course to learn how to trade the stock market. It's just a course that has success, has clients that are successful. It just helps speed up the process. Really, anybody could do this by just sitting here, watching price action, put in 2, 3, 4, 5,000 hours of price action, and you'll eventually see it too. It's not rocket science to trade the stock market, okay? But if you're looking for a faster way of getting to sustainability and success, then of course our courses that are there for you to learn from and to apply so that you can find your edge. Okay, so quick lesson on level 2. I hope you enjoyed it, and have a fantastic day.